Good afternoon. My name is Lisa Padmore, and I'm the Chief Executive Officer of the Institute of Chartered Accountants of Barbados, or ICAB. You're listening to Talking Business with ICAB, and today's episode focuses on the 2026 Budgetary Proposals and Financial Statement delivered by the Honourable Ryan Strachan, Minister of Finance, on Monday evening. You would have seen summaries of the budgetary proposals in the print and online media, and we will not necessarily repeat them, but seek to explain what the budget means for households in clear and practical terms. So let's start with electricity costs and why bills are being adjusted. The budget introduced short-term support for electricity bills through adjustments to the fuel charge. Here are the facts. Barbados generates most of its electricity using imported fuel. When global oil prices rise, often suddenly, household electricity bills rise automatically. A temporary mechanism has been introduced to absorb a portion of this increase for 3 months. So what does this mean for households? Well, bills may still increase, but the rise should be smaller and more gradual than if it would have been if fuel costs were passed through in full. This approach does not reduce the underlying cost of fuel. It simply moderates how quickly the cost reaches the consumer. Number 2, understanding the tax caps on gasoline and diesel prices. You may hear terms like VAT caps and excise tax reductions. These are technical tax tools designed to manage volatility, not to set fuel prices. In simple terms, when oil prices rise internationally, fuel prices normally rise locally. The government limits the amount of tax it collects per litre during these spikes. This does not mean fuel prices fall. It means the tax portion does not increase at the same rate as global prices. So what is the implication for households? Well, fuel prices may still rise, but less sharply than they otherwise would. Number 3, how shipping costs impact customs charges and supermarket prices. One of the less obvious drivers of supermarket prices is freight costs. Import duties are usually calculated on the value of goods plus the cost of shipping. But during global disruptions, shipping prices can rise significantly, even if the goods themselves have not become more expensive. This year's budget temporarily shifts duty calculations to be based on the value of the goods alone or a capped value for full container shipments. The effect on households is that this change is designed to prevent rising freight charges from automatically raising import duties, which can contribute to higher retail prices. It does not guarantee price reductions, but it removes one factor that could have pushed prices higher. Number 4, tax credits and tax rate adjustments. What do they mean in practice? Well, several tax changes were announced, including increases to tax credits and small reductions in personal tax rates. Here's the plain language explanation. Tax credits reduce the amount of tax you owe directly and can result in refunds for eligible individuals. Tax rate adjustments reduce the percentage of income tax paid by certain income groups. For households, these measures collectively mean that many workers, particularly those in the low to middle income brackets, may retain slightly more disposable income. The impact will vary on individual income levels and eligibility for credits. Number 5, support for pensioners and low-income seniors. The budget introduces a temporary monthly payment for seniors below a specified income threshold, as well as for elderly individuals without a pension. From an accounting and social policy perspective, this functions as a targeted transfer intended to help vulnerable individuals manage rising costs for a defined 1-year period. So what's the household impact? Well, these payments provide predictable, fixed support, which can help seniors manage essential expenses in a period of uncertainty. Now, every budget outlines a series of policy intentions, what government plans to do, aims to change, or intends to introduce. However, policy is only the first step. For any measure to take effect, whether it's a tax credit, a customs change, or a new business facility, several additional elements are required. Regulations, administrative procedures, systems updates, legislative amendments, and clear public guidance. Without these follow-through components, policy cannot translate into operational reality. From an ICAB standpoint, timely implementation matters because businesses need clarity to plan, taxpayers need guidance to file correctly, financial institutions need rules to adjust systems, and households need predictable timelines to benefit from new measures. So while understanding policy is crucial, the true test of impact will be how quickly and clearly the implementing regulations are released. As always, ICAB will continue to monitor developments, review the published regulations once available, and provide guidance to the public to ensure that measures are understood and correctly applied. My name is Lisa Padmore, and this has been Talking Business with ICAB.